and welcome back. Our first interviewed guest is Alexandra Woodyer Sherron, the CEO and president of Empress Royalty Corp. She has over 20 years of experience in the mining industry. Alexandra started at PricewaterhouseCoopers before joining Endeavor Financial, a global mining finance advisory firm. Welcome to the program, Alexandra. Rick, take it away.
Alexandra, welcome, and thank you for your ongoing support of the Rural Classroom series, the boot camps, and of course, the live conferences where you've been a wonderful participant. Thank you, too, for showing up today.
Thank you so much, Rick, for having us.
So we had a little bit of an introduction about your background, PricewaterhouseCoopers, and then, of course, Endeavor. Could you go a little more deeply into that? I want to explore something about the CEO's background, what she, in this case, what set you up to be a success in the royalty business? How did you get from where you started to where you are today?
No, thank you. I started in the industry very young. I was one of the first employees at Endeavor Financial, obviously a leading mining finance group. Back in the day, it was when starting up the research, and that was going through the yellow pages in the Vancouver of all the mining companies and asking for the annual reports to be sent and filing them. I then went on to complete my business degree and joined PwC, and then joined Endeavor Financial as an analyst. And I worked my way up through the ranks, became director of structured finance in London, working in over $1.5 billion of successful deals. So with Endeavor, I've worked with the likes of David Rhodes, who's a managing director now, but also the company was founded by my father, Neil Woodyer. Frank Juster was his partner. At one point, Frank Holmes was the chairman. So worked with a lot of very influential mining entrepreneurs over the years, including financing companies like Clive Johnson at BMO Gold. So I've got a sort of a vast network, but also the experience in mining finance.
It's fair to say, I think, that in Endeavor Financial, although maybe less well known than some other firms, was really instrumental in the ascent of Canadian mining finance. And it's pretty obvious as an analyst, and then in the structured part of the business, that you were at least indirectly responsible for a growth of a lot of the companies that are now brand names among the juniors. Would you concur with that statement?
Yeah, absolutely. I mean, I was a junior analyst when Wheaton River was looking at spinning out Wheaton Silver, which has become Wheaton Precious Metals, an analyst in the room as that was all being modeled out. So yeah, very much part of that beginning, especially in the early 2000s, of a lot of the brand names that have come through and been successful in the mining industry today.
So if you could give us a brief, and I do mean brief, overview of Empress, because we're going to get into the weeds in just a minute, but to give us an overview of what it is, how it started, your vision for it.
Yeah, so we offer investors a strategic approach investing in silver, and we are a royalty and streaming creation company, which means we help get mines either into production or to expand upon the production capacity. And what we were seeing, and Endeavor was seeing, was that the streaming companies were doing bigger and bigger ticket sizes, $100 million plus, Wheaton and the likes, but no one was providing that streaming finance solution to the junior side of the market. And we knew we could get some great returns as a result. And that is why we established Empress and took it public about 2.5 years ago. We've invested in, we had sort of a strategy, and we've been proving that out over the last while. We've invested $19.5 million into the portfolio to date, and there's 3 key revenue drivers now coming into Empress. And we look forward to continue to prove the strategy out and bring new investments into the portfolio.
What is it that you do that your microcap royalty and streaming competitors don't do? What would you suggest is your durable competitive advantage?
Our team, we are mining financiers. I also have Endeavor Financial as a managing investment manager. So I have access to all their cash flow models, financial analysts, mining engineers, geologists, to really allow us to punch above our weight. And because we're on the creation side, we work very closely with companies, again, getting them to production or expanding upon the production capacity. So we structure bespoke financing for them. We have a direct relationship, which means I have monthly reporting. I'm not waiting for the quarterlies to come out, 90 days later. I'm getting direct reporting from them, and I know what's happening with our investments, and we're able to de-risk as a result of that and work with them to ensure they're successful, because ultimately they need to be successful for us to be successful.
It's my belief as an Empress investor that one of your other durable advantages, and correct me if I'm wrong, by the way, is an ongoing relationship with Endeavor, which perhaps gives you access to A, see, but B, analyze investment opportunities in a different way than other companies might. Could you go into that? and explain to potential shareholders the advantage to them of that relationship.
Yeah, so, again, we are mining financiers, and with the relationship with Endeavour, that gives us exclusive access to any opportunities they see sub 50 million. Right now, in our evolution of growth, we're looking at $5 to $10 million range. But as we grow and as this revenue comes in and we're able to redeploy it, we will grow in terms of our streaming ticket size. But it really is leveraging off that experience. So not only are we able to source transactions through this relationship, we can quickly vet opportunities and then be able to structure and execute on those transactions.
I came onto your register about a year ago, as I recall, after Manny Bally's conference, the Swiss Mining Institute. And one of the things that attracted me goes to the next question, which is to say your net asset value relative to your enterprise value. If you could talk about the value proposition that exists in Empress Royalty today.
Yeah, so today, just taking our key investments, we did nothing else. We've invested 19.5 into the portfolio. Our net asset value is $47 million. If you look at our enterprise value, it's about $29 million, and our market cap is just $27 million. And we have, over the next 5 years, about $50 million of revenue coming into Empress. We have, again, as I mentioned, 3 key investments that are bringing revenue in. And so it's pretty easy to break down and analyze what our actual company's worth.
And tell me something about the assets that you have on the books now that you're expecting growth from. Tell me something about organic growth. We'll get to inorganic growth later.
So we have the 3 key. We have the Sierra Antipiche mine, which is in Peru, owned by a private group called Sierra Sun. The mine was started by Buenaventura in 2002. They took over in 2016. I actually just got back in yesterday from a site visit to that project. This one was one where they were expanding their production. They're in the process of completing that now, and we've had consistent revenue coming in for the last 2 years. That revenue will grow as they get to their full capacity, which should be within the next couple of months. The other one we invested in was a public company called Luca Mining, the Talahueto project. And we structured this one as a gold stream. So we're getting 100% of their gold, which is a byproduct from their mine. They've been ramping up. They got to, when we invested, they were development stage. They just hit capacity of 500 tons in June and are moving towards full capacity of 1,000 tons by the end of this year, beginning of Q1. So that was another one that we worked with the company to get them to production. And we've been receiving revenue that for the last couple of months. And we'll continue, especially as they ramp up, to get that consistent revenue coming in from our silver stream. We also have one in Mozambique we invested in when it was a development stage project. They've been in production for over a year now. They've been ramping up, and we've been receiving consistent gold royalty payments from that investment as well.
If we assume that you have a $47 million NAV against a 30-something million EV, that suggests that your cost of equity capital is fairly high. When you do an acquisition, how do you make sure it's not dilutive to existing shareholders? There are companies that are obviously selling at twice NAV, and there are other companies that are selling at 65% of NAV. By definition, that means that the companies that are selling at a discount, well, they are, in a sense, a better buy in terms of net present value, are challenged in terms of both cost of capital and return on capital employed. So if you could talk to me about accretion versus dilution at the board level.
Yeah, so I mean, we launched a company, we had a strategy, we've executed on that. We did raise some capital in the equity markets initially. We took on a debt facility, which we're looking to restructure at the moment and bring our cost of capital down. But say if our cost of capital is 17%, anything that I'm looking to invest in is north of 25%, closer to 30% in terms of our IRR. Our portfolio IRR right now is about 30%. And that is part of anything that we're looking at to bring further into portfolio is using debt facility to do it and not dilute the shareholders. And as we will have free cash flow coming to the company soon, I mean, we're just getting the revenue coming in now. Our G&A, our burn rate is about just under $2 million, about 1.7, 1.8 million US. We will have free cash flow very soon to reinvest into the portfolio.
That would suggest that G&A as a percentage of revenue is in the 5% range. And in order to be competitive with your mid-cap peers, it would seem that you need to double in terms of NAV, roughly. how do we get from there to here, and how long do you think it'll take you? Understanding that deals that are in the hopper sometimes fall out of the hopper.
Absolutely. I mean, we are evaluating several opportunities at the moment. We've got exclusivity on 2 that we're looking to advance if they, again, check out through the due diligence, technical, legal, tax, etc. So we want to grow the portfolio and bring new investments in, and without dilution to the shareholders, using a debt facility to do so that'll be in better terms than we initially had the debt facility. So it really is growing this company out and finding the right investments. I mean, it's also important to note that management and board, we own 25% of the company. So we're very much aligned with shareholders to see real value come in and doing the right investments at the right time. The market's been really interesting in the last 6 months in terms of investment opportunities, especially with the equity markets pretty much drying up for most mining companies on the junior side. So we're seeing a lot of opportunity, and it's choosing the right ones to diversify the portfolio at the moment.
I'm delighted to hear you talk about a willingness to use debt on your balance sheet, not just because I'm a debt provider, by the way, but also because you've come to understand that there are occasions where debt is cheaper than equity. Royalty and streaming companies, because of their extraordinary margins and because of the predictability of margins, have more access to more types of balance sheet structure than other junior companies. Could you talk something about how you choose to build your own capital stack and how that might change as you go forward?
Yeah, I mean, if you look at our shareholder base, we've got Endeavor and Terra, 2 very large shareholders, part of our board and management. Obviously yourself, the Sprott Funds, US Global. We've got Stephen Gleason, who became a large shareholder. So we have a strong shareholder base, and that's been increasing. Obviously, you came in last year, as did Stephen, and really building that out. But it is, we list on the OTCQX this year, and we're definitely seeing a lot more US retail investors coming into Empress.
And that goes to capital acquisition strategies. One of the things that small companies always need to do is determine who the shareholder of the future is going to be and how they reach him or her. In effect, if you will, building a cult. Tell me something about shareholder and capital acquisition strategies, both with regards to debt, but more particularly equity going forward, your promotional strategy, if you will.
Yeah, I mean, for us, it's a new company. We are obviously mining financiers coming to this public company side. And for us, it's establishing our market presence. And I think when Doug was saying earlier, it's not just establishing our investor relations program, but it's the investments that we're making and building our portfolio out. We're seeing a lot more liquidity in the US, and I think generally the royalty and streaming companies do. So we're focusing our attention towards the US. I think they understand the royalty and streaming model better. And also, we're not a company that's putting out press releases every week about acquiring a new portfolio or someone and paying a premium. We're very much in a long-term strategy of creating real value and real revenue coming in. And one of the things I love about the streaming model is we're able to keep our G&A low. We don't need a huge team of people to be able to manage what we're doing. Once initial investment's made, obviously it's keeping the portfolio management there, but then it's just sourcing new opportunities. And with Endeavor Financial, we're really able to punch above our weight.
I think that's a very good point that we keep returning to. Now, without giving away too much by way of competitive strategy, some of your competitors are in this presentation, tell me something about what your pipeline looks like. What, in a very broad sense, are the transactions that you anticipate being able to complete in the next 12 months? And how might those targets change as you get larger, if they might?
Yeah, so for us right now, we've got exclusivity, as I mentioned, on 2 deals, both in Africa. Both are producers, so we're helping them expand the production. So that's sort of a classic case for us where they can't get more equity, or the equity markets are tough. They don't want to take on debt or take on more debt, and then we're helping them expand. The other opportunities we're starting to see, and quite a bit more, are acquisition financings. So there are operators who are, say, private or smaller operators, producers, and they're getting opportunities to buy assets from some of the larger mining companies in their jurisdictions that are having to cut back and refocus their attention. So that we're starting to see a lot of. There's just, at the moment, I'm very much more focused on producers or near-term producers that will bring immediate revenue into Empress, allow me to bring my cost of capital down, and then be able to redeploy into maybe earlier stage projects, meaning within 12 to 18 months from production, in the next 12 months. But it really is revenue focused for us, and letting that revenue come in and be able to redeploy it.
It's obviously going to be a challenge, although you seem to have succeeded in the past at finding acquisitions out of the mainstream, perhaps through Endeavor, that allow you to overcome at least the equity cost of capital hurdle. I guess I'm not curious. How in the 12 to 18 month time frame, do you have a feeling for the quantum of acquisitions that you are more likely than not to complete? In other words, if what we have is a scale issue, how quickly do you believe that you're going to be able to address that scale issue? And how do you see financing these acquisitions?
Deals take time. I wish they were done overnight, but there's a lot of work that goes into them. When we look at a project, and just kind of give a reference point of how we do this, we identify an opportunity through our network. We have not been in a competitive bid process to date. So these are people we have relationships with. We know who they are. We know what they're capable of doing. We understand the projects that they're working on. We understand the jurisdictions we're going on. And that's important to note. We are going into more exotic locations. We're in Peru, Mozambique, and Mexico. And I will continue to look in South America and Africa for opportunities. But as we sort of advance these opportunities, we go through the technical due diligence, we hire the third-party engineers, we go through a comprehensive legal due diligence, the whole documentation. Most of what we're doing is streams, so they are a little bit more complex than royalties. And as we bring the opportunities, that is, could be a 2-month time horizon to complete a deal. Realistically, it's about 3 to 4 months, maybe 5 months by the time you get all the government approvals and everything in place. So they do take a bit of time. I would love to do several deals in the next short period of time. I don't want to go on record for it because sometimes we get very advanced and there's something that we just don't feel is appropriate to take the risk on, and we'll walk away from it. I've rejected 6 deals now in the last over 18 months. And that is because, again, our capital we're all large shareholders, and I want to make sure these transactions work and that they will bring real value into Empress. And in terms of funding them, again, we're looking at restructuring our debt, so we won't have to have dilution to our shareholders to advance the company forward.
This next question will be a no-brainer for you because I've asked it before and you've answered it well. Assuming that the attendees at the boot camp are curious about Empress and want to learn more, which, by the way, they should be, and I hope they will. How do they contact Empress, and in particular, who do they contact? As you know, Alexandra, I like my investors to have a curated experience through a company rather than merely having to rely on public documentation. So how do they do that, and who do they contact?
Our website is empressroyalty.com. Contact me. My email address is alexandra@empressroyalty.com. If the number is also on our website, you can reach us there. I'm happy to jump on a call and a Zoom with my VP Marketing and any investor, go through our presentation at depth, answer any questions, especially as press releases or financials come out. If I'm not at a mine site visit or a conference, I'm readily available to jump on a call with anyone.
Ladies and gentlemen, please note the conflict. I'm a shareholder here, like I am a shareholder in everybody that's exhibiting. The answer to the last question was correct. The buck stops at the top. You get more information about the person who is driving the company. In this case, the young woman who I am interviewing. Alexandra, thanks for your sterling efforts building this company. Thank you, too, for your ongoing support of the boot camp and live franchise of Rural Investment Media. We couldn't do what we do without you performing for shareholders and supporting us. Thank you.
No, thank you so much, Rick. Always a pleasure to chat with you and your audience. Thank you so much.